Welcome to Stony Finance Lab channel.
Hello, everyone. Today we'll be presenting A Classy and Elegant Investment for Women by Ana Maria Coco, Catherine Castillo, and Natalie Kendrick. Our target and investment goals. This presentation can assist but is not limited to our target of a young professional woman with or without children who just graduated and started earning first income with an entry-level job. The investment goal is to pay off student debt and invest simultaneously for a period of 9 years to save for a car and down payment. The investment strategy is to diversify portfolio by investing in safe assets such as ETFs, moderate such as stocks, and risky assets such as cryptocurrency. For this investment, our assumption is to save 20% of net income. This is how we calculate it. We have the average entry-level position salary of $55,000 that we subtracted by tax bracket and deduction for an employee-sponsored 401 pre-tax. Our net salary is now $40,700. After doing a little research, we concluded that an average person who doesn't have any extraordinary costs can save 20% of his net income. So the amount of monthly savings that we are going to use for our investment goal is $678.33. Investment apps that we use but are not limited to are Bitstamp, Gemini, Coinbase, Robinhood, and Weave, paying off student debt in 9 years. On the left-hand side, you can see the breakdown of $678.33 that we are going to subtract from the monthly salary to pay off student loan and invest at the same time. We are going to pay off debt by $378.33 and invest $300 each month. On the right-hand side, you can see the numbers of years to reach a full payoff of debt. In the following slide, we are going to present an investment strategy of diversification based on savings of $300, and we would be looking into ETFs, cryptocurrencies, and stocks. Why invest in ETFs? Portfolio diversification. Given the wide variety of sector, style, industry, and country categories available, ETF shares may be able to provide an investor easy exposure to a specific desired market segment. Liquidity. The fact that most ETFs are very liquid can be traded throughout the day is a major advantage over index mutual funds, which are priced only at the end of the busy day. And lower costs and tax benefits. ETFs have lower capital gains and they are payable only upon sales of the ETF. The ETF that we choose to look at was Vanguard Mega Cap. This fund tracks the performance of a benchmark index that measures the investment return of large capitalization stocks in the US. Some of the assets in this fund are Apple, Microsoft, Amazon, Tesla, Google, as you can see in the chart. The monthly trailing returns for this fund has had double-digit growth with a 1-year return of 14.87%, 3-year of 19.50%, and so on. The calendar year percentage return is showing the historical returns. As you can see, it has had double digits growth at the end of every calendar year since 2012, with the exception of 2018. However, if you kept your investment and did not sell in 2018, the return in 2019 yielded 31%. Calculations for ETF. As you can see, with just even a $100 investment each month, you will have $1,200 a year. At the end of 9 years, you would have saved over $10,000. By investing in this ETF after 9 years, your investment would have yielded an average return of 16.57%. By using historical rate of return average for 1, 3, and 5 years, you can see that the compound interest is your friend. Why invest in crypto? Because cryptocurrency is relatively new asset that yields higher return but higher risk, it can serve portfolio as a great diversification tool. On the other hand, trading with crypto is quite simple because crypto market operates 24/7, it's faster, and it has lower fees. Thirdly, cryptocurrency is designed to be decentralized, hence it is not affected by government and national incidents, but by user sentiment. When it comes to decentralization, it is important to mention that cryptocurrency have far wider spectrum of use cases than just buying and selling, such as lending and borrowing, yield framing, staking, NFTs, etc. But for the sake of this investment, we are going to talk only about buy and hold investment strategies. And lastly, considering the growth of crypto space, blockchain and its technologies, it is clever to assume that it will become a part of daily life and accepted among controversial investors, institutions, and government. So might as well save and get ready for what is coming. We are going to look into an investment opportunity in cryptocurrencies such as Bitcoin, Ethereum, and Litecoin. On this chart, you can see historical price of Bitcoin, Ethereum, and Litecoin. Since Ethereum and Bitcoin were in a rapid growth in past 10 years, calculation of future returns based on historical data had too high yields. So we found more realistic crypto price predictions and a great website called Digital Coin Price. On the right-hand side, you can see the Bitcoin price forecasted graph according to estimated digital coin price for 2031 is about $223,000. And here we can see that Ethereum is about $15,000 while Litecoin is about $600. Calculations for crypto investment. First, we will calculate monthly rate of return based on digital coin price forecast. Second, we will split up investment of $100 per month in 3 most common cryptocurrencies. Since we didn't have monthly nor yearly prices, we calculated the average monthly return based on future values and past value. Future values were prices in 9 years shown on the prior 2 slides, and the past values were the prices on May 5th, 2022. However, our average monthly rate of return was 0.96% for Bitcoin, 0.91% for Ethereum, and 0.97% for Litecoin. Summing all 3 and multiplying by 12 months, we got the average rate of return of 34.15% yearly. After investing 180 monthly annuities of $33.33 for each crypto, you will have the amount of about $47,000, which is 0.07 Bitcoins, 1.01 Ethereum, and 26.82 Litecoins. Why invest in stocks? Stocks offer investors the greatest potential for growth, capital appreciation over the long haul. Investors willing to stick with stocks over long periods of time, say 15 years, generally have been rewarded with strong positive returns. But stocks as well have high risk and high volatility. Let's take a look at an investment opportunity in an Apple stock. Based on historical data obtained from Wharton Research Data Services on a time period of 2013-2021, we calculated the average rate of return in the past 9 years. The average rate of return equals 30.44%. Using the average rate of return, we will take a further look into what our investment of $100 monthly can grow into in 9 years from now. Here we can see the calculations obtained based on the previous data and how much it will grow in 9 years. Assuming an initial investment of $0 with a monthly contribution of $100 over the length of 9 years, with an estimated average rate of return of 30.44% compound monthly, the charts show an estimate of how much of your initial savings will grow over time. The results obtained at 9 years, you will have about $55,000. Looking at the graph on the left-hand side, it illustrates how the red slope equals the future value at an average rate of return of 30.44%, and the blue slope equals the total contributions. We can see that by year 9, our total contributions of $10,800 can be more than triple the amount if invested $100 monthly in an Apple stock. Summary of this investment. In 9 years, you will pay off your student loan and have money for your dream car and down payment. Takeaways for successful investments. Do's and don'ts. Invest now, no amount is too small, don't wait. Compound interest is your best friend, don't let the emotions drive you. Be a disciplined investor and aware of scams, don't panic, sell. Balance risk of your financial and human assets, don't act before you make your own research. Never stop learning, don't overtrade. In addition, we would like to recommend 2 great tools for personal finance investing. The first one is Mint, and it is great for tracking your spendings and savings. The other one is Acorn, which rounds up all of your spendings and automatically invests your money after reaching a certain amount. Here you can see the sources we used, and we would like to end our presentation on a quote from Albert Einstein. Compound interest is the 8th wonder of the world. He who understands it, earns it. He who doesn't, pays it. Thank you for your attention.
Thank you for watching this video. Please feel free to like, comment, and subscribe to this YouTube channel.